Welcome to LeonCo and welcome to your weekly video. Welcome to LeonCo and welcome to your weekly video. And on this week's, we want to discuss some sort of a bonus video for the month of September, and we want to discuss when would actually be the next market crash. Yes, we understand that none of us know exactly the future or what is going to happen, but some circumstances can help us pinpoint when exactly or how is going to happen the next market crash, especially now when we are in this state of realignment in the stock market, when some people believe that we are heading towards normalization and up towards highs, and some people are saying that we are going to a normalization and going downward. So this is something very interesting to discuss, and something very important that we need to take in factor in consideration is the health standpoint, not just in the United States but in the whole world. We are in this pinnacle of the situation in which we believe that we are going to head into a second wave of this pandemic, and this is very important because history has shown us that the second wave is much stronger than the first wave. When it comes to the Spanish flu, this is what happened, and when it comes to otherworldly pandemics that we've faced, this is what's been the norm. The second wave is the strongest. So especially in the United States, when we are heading into the flu season, this is something going to be critical for this process. If we are going to hit a second wave of this pandemic, and it's how it's going to affect the economy. Well, if we pinpoint what happened on March, when we decided to shut down the economy whole as the United States, if the second wave is stronger or much more furious, or we could say it's more abrasive than the first one, this could be something very dangerous for the economy and for the health of all the people in the United States. So we need to keep this in mind very specifically. Even though we are in an accelerated pace to get that vaccine or that treatment, and early states suggest it's as early as January 2021, we still have 3 to 4 months left into this year. Another thing that we need to take in consideration is that there have been lots and lots of rallies in the stock market. Some people would say these stock rallies have not been necessarily pinpointed with earnings or pinpointed with the real money that companies are making, but there certainly are rallies that are being succeeded in the stock market. This could be because of high demand and low offers, or this could be just an inflation situation that we're looking at and a huge bubble that's been building up in the stock market. Either way, there are sectors that are doing very well and others that are not doing necessarily well, especially when it comes to the tech sectors. Tech sectors are blowing expectations throughout this year, and it's something very important that we need to take in consideration, because in some point we need to realize that there has to be a normalization pattern. This cannot be just going up, and this is something that is facing the Tesla company. The Tesla company throughout these few months has been going upwards like a steamboat, but throughout these couple of weeks it's starting to go back down and starting to a normalization pattern, and this is what's supposed to happen. Well, what is the problem with this? If lots of companies start to do this pattern or start to face this tendency, people are going to be scared and they are going to start withdrawing their money. Especially when we have noticed that a large amount of not necessarily experienced investors or long-term investors have been hitting the market to make an easy buck, and this is going to be a problem in the long run, because if we see just a little dip in the stock market, lots and lots of investors are going to withdraw and take out their cash, which could catalyze a larger dip in the market. And also factor that we need to take in consideration is the household. What is happening in the household? Lots of people are starting to either not pay their rent or they're losing their homes because there is no money. There are not many jobs. There are not many money accessible. The government has decided to stop all of their help to the United States people. So this is something that we need to take in consideration. So taking all of these factors, in which the factor of non-stock market or non-economical factors of the pandemic, the factor of the stock market being inflated, and the fact that people are not having jobs to pay their rent or they're losing their homes, this could be the alarming factors that can head towards the next stock market crash. So we cannot give you a specific date, but all things that we can say is, if we keep spiraling in this trend, eventually maybe it could be just as quick as a few weeks or maybe a few months, but a stock market crash is inevitable because the stock market cannot live on fantasy alone. And yes, we said it, it cannot live on just fantasy alone. So I hope you guys are staying safe, staying healthy, and always remember to have that king mentality.